Lead Shawn Hickman is joining us from Market Matters. He's the research lead there. Hey Shawn, how are you?
Good, Nadine. Yourself?
Very well. I noticed that just to start, you've brought us a chart that is comparing bond yields and I believe the overall index. So why are you thinking about the 3-year bond yield versus the ASX 200?
Good question. I think if you just got to look at that chart, I won't glance over, but quite simply, every time we see the 3-year bond knocking on the door of this 3.75, 3.8% level where it is today, the ASX 200 has been under 7,000. In a couple of cases, well under 7,000. Mm-hmm. Today, market's probably nearer 7,300 after this morning's rally. If rates don't come off, if they stay where they are, or bond yields, God forbid, go any much higher, I think we're going to see weakness in the market. So the risks are, personally, we actually think at Market Matters, the bond yields are at the top end of their range and bond yields will come back. But we have to take into account there are risks here. The market is pricing in bond yields, in our opinion, coming back a bit. So it's got a bit of an optimistic hat on at these levels. So you could say it's a bit rich. Valuations are a little bit stretched at this level. Okay, interesting. So that's even post reporting season. When you take a look at the chart of BHP, which you've also come armed with, you can see that there's some pressure been coming through, retreating from highs above $50. That was record highs, I believe, and down now around 40, 44 and a half. Yes.
So where's the momentum?
I put this chart in because everyone wants to talk about resources. I know this one at Market Matters, resources and coal and the banks, and then a few other questions around the edges. Mm-hmm. And I've put some telco stocks in today, which I know a lot of people find quite boring, apart from when they rant about Telstra. So I thought I'd put BHP in as well, just to keep the momentum going in those stocks, or in where most of the interest is. Mm-hmm. BHP's come off the boil. We've been saying this for quite a while. We feel that we're going to get a cycle now for recession fears increase. We've seen 2 big cycles already in 2023. We've seen in January, the market rallied very strongly. Everyone thought that interest rates were peaking out. We'd have rate cuts on the horizon. Now suddenly we're talking about 4.4% in Australia, 5.4% in America. Rates are higher for longer. I think you've already probably had that on your show once or twice this morning. And that's making people look ahead and say, well, hang on, if rates are going to be higher for longer, maybe the central banks are saying we are prepared to push these economies right on the edge, if not into recession. If that unfolds, then the next cycle is resources coming off the boil. We're seeing that happen at the moment. Quite a few resource stocks are coming off the boil, and BHP is one example. So we're, as I said to you last week, we hold BHP, we're underweight, we are happy buyers, we think it's a great company. I don't think anyone would argue that point, but we could still see BHP going low. We're not yet looking to buy BHP at these levels. Similarly, we're not yet to buy stocks like South 32 that I've mentioned on this show as well. We're looking to buy them, but we think they can come lower.
Okay, but aren't you long BHP
Yes,
in
we
what
are.
you already hold in the portfolio?
We're holding it in the portfolio, but I stress we're well under market weight. It's a pretty big beast in the ASX 200 these days.
Yeah. Oh yes, yes, it is. All right, Mineral Resources. It was one of those companies that reported last week. Look, there was a lot of news around Mineral Resources as well. You know, you can talk lithium, you can talk partnerships with Chinese entities. You can also, talk bread and butter iron ore.
Exactly right. There's a lot going on under the hood with Mineral Resources. It's a stock, again, we like BHP. The question is, where or if do we buy it going forward? So, just like I said about BHP, we own BHP. We've also got a large 18% cash holding in our flagship growth portfolio, which is very, very high. So we feel a bit like a child in a sweet shop thinking, okay, what do we buy if this market keeps on coming down? Yeah. There's always a big if there. Mineral Resources is one on the table. We thought around $80 we might start accumulating. We've actually backed that off now, and that's why I've put this in the chart today. Sorry, in the pack today. Yeah. We think it can go lower. We think it can go under 75, maybe even be as low as $70. So we're just being a bit patient. The ESG space has come off the boil a bit, not so much today. The iron ore space is coming off the boil a bit. I just think we can be a little bit patient there.
Okay, so that is Mineral Resources. Let's get into those telcos that you reckon are boring, but they can be beautiful as well. Particularly perhaps when we see, the doors opening to migrants, immigration once again. We see travelers coming back. TPG reported yesterday and pointed to some of those dynamics. Today, I do note that some of the brokers are cutting its target price on the stock, $6 by UBS, $5.30 from Goldman Sachs. What are you seeing in the charts?
I read UBS's comments on that this morning, and they simply only downgraded it to $6 because they upgraded their 3-year bond target. So it's purely a valuation call on interest rates as opposed to the company itself. They liked what TPG came out with. We thought it was quite healthy as well, but the stock popped quite hard yesterday. I think it's already given back about 40% of the gains yesterday. Similar, TPG, yes, down around $5. We can't see a great deal of downside, but it's also not that exciting for us. Don't want to use that word boring, but it's not. We don't own it, and we're unlikely to own it in the foreseeable future. We do own Telstra. We own Telstra in our active income portfolio. It's doing very well. I can see Telstra getting up to 450 this year. That might only be another 6, 7, 8% higher, but with the dividend coming out, that still makes it a solid investment, especially if the market's going down. So we own Telstra. We think it fits very well into our active income portfolio.
And even if it hits that $4.50, you still hold it for the income.
Potentially. I mean, obviously, if a stock gets too expensive, you've got to take it off the table, whatever the yield is.
Okay. Now, because you need to crystallize those profits, what about Spark New Zealand? We don't often have Spark New Zealand thrown into chart packs for discussion.
Well, I thought I'd put that in there because it's just a bit different.
Defensive?
In theory, defensive, and that's one of the things people are looking at. The market was down 100 points yesterday morning, and the first thing people are looking at their portfolio are saying, have I got enough cash? Have I got enough defensive? No, maybe not, maybe not. Where shall I put it? What defensives are good here? I heard that conversation more than once yesterday morning. There's nothing like a triple-digit loss to create that. We've obviously already eradicated over half of that, fortunately. Spark New Zealand, we just think it's too expensive here. So I've put it in just because it's one of the telcos within the ASX 200.
Bottom left, top right.
Yeah, it's just come a long, long way. The report wasn't that good, but they expect those headwinds to dissipate going forward. But we think it's priced for those headwinds definitely to dissipate and for it to keep on producing. So to me, the risk reward is probably more on the downside. So I wouldn't call it a sell, but we're not going to buy it here. So if I was to buy a telco right here, right now, probably just add to our Telstra position, which also, I hasten to add, gets a few comments at Market Matters because a lot of punters hate it. A lot of investors hate it.
And that's just being burnt by past experience in markets, or is this the consumer side of every investor talking? I
think it's a bit of both there. I'm having a big issue with getting my NBN connected through Telstra, and I wouldn't want to rant about that. That would take a lot more than my 10-minute slot this morning. But if they say they'll call you back within 5 days, you're lucky if it's 25.
Yeah, all right. Well, I'm going to leave that one there. I'm not going to get drawn into that one. But to your point, we've got the local market sitting at 7,270, up by 0.6%. So you need to think, you need to plan for the potential of a further fall coming through.
Yeah, I think so. And I think, as the person before from Perpetual said, stocks are getting re-rated around interest rates, just like TPG. That kind of summed it up this morning. UBS pull back their price target, no other reason than interest rates. So if interest rates pull back, they'll push it back up again.